Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'm going to go through the US dollar index as the dollar has remained bullish, which is something that we've been talking about for the past week or so now. We've basically talked about the reasoning for the dollar to remain bullish, and the big news for the week was the FOMC federal fund rate decision this evening. Basically what we saw was Federal Reserve Jerome Powell leave rates unchanged at 0.25% as expected, but basically talked about the fact that when the stimulus ends they will begin to hike rates. There is some talks about the balance sheets as well. However, he's basically saying that they were going to hike rates before they sort the balance sheets out. So a hike is imminent. It's probably likely in March. So it looks to me like when that stimulus ends, we should be full steam ahead for some rate hikes from the United States. Now, in the build-up to a rate hike, we typically see a currency gain value, and that's what we're seeing so far. The talks of rate hikes are continuing to push the US dollar higher and continue to remain bullish. The trend on the technical point of view as well is bullish. You can see here on the weekly time frame, the market's making clear higher highs and higher lows, rejecting previous areas of support. So that is a good sign that the market is going to continue to press higher. The next level of interest is going to be around about $97. If we can clear that area there, we could see some real significant upside to the US dollar in the short term. Now, if you are a trader of the dollar, you want to be looking for some retracement phases now, because what we've seen recently is that when price pulls back into previous structure highs, we've been bouncing. So that's what we need to be looking for here. If price pulls back into this sort of 96.20 area, the previous structure high, and buyers come back into the market, that could be ideal to see longs re-enter the market back up towards this $97 area. So keep an eye on the US dollar. It's definitely remaining bullish. Hikes are imminent. Inflation is rising in the US. Powell did also talk about the fact that the jobs data was pretty good as well. Now, we kind of touched upon it in a previous week ahead analysis video, that if you actually look at the overall bigger picture of jobs that were created in 2021 for the US, it's actually quite a decent year for jobs creation, one of the biggest actually. So that is a real big positive. He's talked about jobs numbers being pretty good. He's also talked about wages being pretty good as well. So, the next NFP report in a couple of weeks could be also a factor of the dollar continuing to remain bullish as well. So, the next target, though, is going to be $97. What happens when we reach there? Do we break through these highs, or do we kind of reject a little bit? It looks like the dollar's going to remain bullish, so I expect a bit more of a breakout to the upside here, as long as the data remains good for the Fed. Thanks for watching this video update. I hope you enjoyed it. If you did, leave it a thumbs up, subscribe to the YouTube channel to see some more of our Forex trading content, and I'll speak to you in the next video.